I don't feel like anybody's necessarily slowing down. I think if anything, they're being a bit more conservative in their underwrite.
Today, more than ever, it is more important to have a clean project that turns right the first time.
We're really looking at comps as competition. Like, who are you up against? Like, what does the next street over look like? What are the other folks doing? What are the finish outs that are selling quick on the market? And how well are you going to do to compete with that?
We haven't lost that service first approach to growing the business and to helping our borrowers scale. Hey guys, it's Sean with HouseMax Funding. I'm here with our panel of experts for this week. We've got Aubrey Kozer, one of the top 15 hard money loan originators in the country in 2024 and the number one loan originator in Texas in 2024. She's an absolute expert in the field, and we are very lucky to have Aubrey with us this week. James Ferguson is HouseMax Funding Director of Sales, hard money master for the last 7 years. He's personally originated hundreds and hundreds of loans and is the deal desk. He's the first set of eyes for HouseMax Funding on every loan. And then Jeff Fector, co-founder and CEO of HouseMax Funding and a veteran of more than 3,000 flips before starting HouseMax in 2017. So guys, thanks for being here.
Yeah, thanks for having us.
Thanks for having us.
All right, perfect. Let's jump right in. Let's talk about DSCR a little bit. And I think, Jeff, we'll start with you. Just kind of given the volatility of the market and the up and down and rate changes, and there's been a lot of changes in DSCR, even just in the past 60 to 90 days. What are you seeing trend-wise, and what are you looking at most closely when it comes to DSCR loans?
Yeah, so over the last 30 days, 60 days, we've seen the interest rates be super volatile. The rates are really based off the 10-year Treasury, and that 10-year Treasury has been as low as 3.8, and in the same week, 4.5. And then, so those swings cause everybody to be super cautious. And when we go to originate those loans, we're going to originate those loans and then sell them into a secondary market, an insurance company or whoever. And what they're doing is they're going to package all these loans up into kind of $500 million tranches and then sell them away. Well, when the market is so volatile going up and down, the only way to combat that is to have extra spread. And so not only are we seeing the rates kind of go up and down by the 10-year, it's also they're adding some spread on top of that. And so we'd love to see the interest rate environment become calmer, but while it's turbulent like this, the rates are up. Luckily, we sell direct to an insurance company, and so our rates, even though they have gone up and down, similar to the market, our starting point is so much lower that we're in a really great spot.
So, Aubrey, you've originated close to 200 loans already just in the first quarter of 2025, and you're working with everybody from novice fix and flip to high level, I guess what we would call industrial flippers. What are you seeing and what are you hearing from your borrowers that's tied to DSCR?
Yeah, I think by and large, if you've been in the real estate industry for a long time, you're no stranger to rate changes and some volatility there. If you've been in it for 20 plus years, you've seen interest rates as high as 18%. So anywhere from 3 to 9% is not uncommon for these guys that are kind of experts and been doing it for a while. So I don't feel like anybody's necessarily slowing down. I think if anything, they're being a bit more conservative in their underwrite, particularly if the exit is through a DSCR rental loan, and just kind of planning for the worst and not hoping, but checking that their numbers work out, whether the rate is 6% or the rate is 7.5%. Fortunately, like Jeff mentioned, we are as direct as it can get. So by and large, we're still beating out the market. And I think investors, if you've shopped at all, are realizing that, and they're choosing HouseMax every time. So originated quite a few DSCR loans last month.
That's great. James, speaking of underwrites, you are the deal desk, essentially the director of sales at HouseMax Funding. Are you looking at deals differently today, specifically DSCR deals? Do you do the initial underwrite for HouseMax differently today than you did 60 or 90 days ago, given the kind of volatility of the market?
I mean, yes, I definitely am. I mean, I want to look at the sponsor. I want to look at their liquidity stack and look at their experience. And of course, certain thing that's important in our space. Also the geo, but are they pioneering? Are they trying to do something different? Are they familiar with that area? But 60, 90 days ago, similar type of look. A couple of years ago, as I've been in this industry, I've seen where the economy would save everybody. I like to see if people have an opportunity to really make a good boutique product, and if they have some cash reserves to back it up and then know how to talk about it and market it. So having property management experience, being familiar with that, and knowing what they're doing.
Yeah, great. So Jeff, looking at HouseMax's portfolio of loans over the last 12 to 24 months, what percentage is bridge loan versus DSCR, and have you seen any dramatic changes in that recently?
Sure. So our book historically has been kind of 70% fix and flip ground up construction, and it still continues to be that way. But the change has really been over the last year, where a year ago, 25% of those fix and flip ground up construction folks were exiting into a DSCR loan. Fast forward to today, it's closer to 50% are exiting to a DSCR loan. And I think it has to do with multiple factors. One, are they able to sell it for the price that they want to get? Maybe not. And then two, our rates still are historically really good on the DSCR side. And because we are so much cheaper than the rest of our competitors on the DSCR side, we're seeing us take more of that lion's share of that business.
Yeah, good. James, similar question to you is, in your experience, what drives somebody to go from a strategy of fix and flip or exit to a DSCR?
Well, most of the investors we see that are getting into the DSCRs right now and are savvy in the market, they get three-pronged approach to it. So you value add it, so you're going to get equity right off the bat, and then you're going to have your, once you get it on the market and you have your leases coming in, you're going to have some return on your investment there monthly. And then, of course, third thing that a lot of people don't realize is the tax implications with your tax write-offs. So there's a three-pronged approach to it, and most folks will take advantage of that because it's in the long run, they're going to have a ton of equity and income during the whole entire time.
Nice. So, Aubrey, as someone who's originated several hundred DSCR loans over the past couple of years, what trends are you seeing? What reasons are you seeing somebody starting with a strategy that they're going to exit is determining that they're now going to hold that property and move into a long-term finance?
Yeah, some of it I feel like is not exactly chosen by the investor. Some of it is kind of what the market demands. But that being said, as an originator, like my job is to originate. It's to start the loan for you. But I'd be doing every investor a disservice if I wasn't considering how I'm going to get them out of said loan. So by and large, even if you don't work with HouseMax, I think going with a lender that has both products available to help you with the bridge financing and get you out of it is super instrumental, and it could be any easier to step somebody from a process of a bridge loan into a DSCR. Most of the time my investors just tell me they want to do it, and then I pick it up and I finish it for them. But I think some things to consider is sometimes the market, softens and they realize they're not going to get the flip profit that they really had wanted. Sometimes they're like, actually, I really do love this asset after the renovation's all complete and it's like a child and I don't really want to part with it. And then, in kind of that vein, what James had mentioned is underwriting to potentially both strategies. And some things to consider in that is, what does market rent really look like? And I know a lot of investors are using Rentometer as the main driver for what rent could be. Something to keep in mind from the underwrite that I see is we're using appraisers and we're getting full interior, and they're getting market data from the MLS, which often is really different than what Rentometer is presenting. So I think if you are considering keeping as a rental, go to your realtor, go to your team, and get a really comprehensive look at what market rent looks like. And be prepared that those numbers might not match. So underwrite the most conservatively as possible. And if, we want to contest value with an appraiser, most people are pretty understanding. They're just like, show me the numbers and I'll make an appropriate change. But if we have no data to show them, they're not going to budge because that's their job. So those are some things to consider getting in and then getting out of those loans.
Great. Jeff, we run into almost weekly a bridge loan coming to maturity and the investor scrambling, oh my God, I need to refi. At what stage and how early should somebody that is thinking about DSCR jump into the process?
Yeah, I think if you're thinking about a DSCR loan, I think I would look at that right around 80 or 90% done with my renovation. And really at that point, you should be asking yourself, what does this look like, right? You need to make an informed decision. Do I want to sell it or do I want to keep it? And you don't want to wait until you haven't been able to sell it to decide to keep it. Because if I put that house on the market at $500,000 and it hasn't traded at $500,000, what do I think my appraised value is going to be? It's going to be something less than that, right? If I look at that and right before I'm at the end of my renovation, I decide how well did this turn and what my competition looks like out there, and I make it an informed decision. Am I going to keep this asset or am I going to sell it? But really, before you've listed it, so that you can make an informed decision, you get one chance really to be new to sell it. So you either need to take that route or the DSCR route, but I really don't recommend going to try and sell it and then as a backup option, try and go into a DSCR. We're not seeing those outcomes be super favorable.
So Jeff, you can't turn on the TV today or look at your phone without seeing something about tariffs and the impact that it's going to have on the economy. As, again, a veteran of more than 3,000 flips, how does this change? Right? Given that so much of our building materials are purchased from outside the U.S., like, as an investor, as a flipper, how does this change your strategy when it comes to scope of work, budget, building materials?
Yeah, that's a great question. I do think that it's super important to understand what your building costs are going to be and renovation costs are going to be on these fix and flips. The expectation on new builds is that the cost is going to go up somewhere between 10 and 15%. Most of the folks that we're lending to don't have that same buying power as a national builder. And so we're expecting it to go up 15 to 20%. And so how I would look at it is I would look to go and acquire that material as quickly as you can so that you've got a known price. And then I would look to offset some of this cost by going into the bid rooms and buying directly from these suppliers as a pro. What a lot of folks don't know is that you can go to the bid room like Home Depot. What we used to do back when we were doing a lot of flips is we'd go through, we'd select everything online that we want. We would save it as a PDF and then email it to the bid room. And then they would come back to me with my contractor pricing. And on some stuff, it would be 30, 40% different. Appliances was like a major one that we'd save a lot of money. And we're not seeing a lot of our 5 to 15 fix and flip investors doing that. I think that's how you offset the tariffs, is go out and get better deals on products, have better relationship with your vendor. But if you're not using the bid room, you're making a huge mistake on your fix and flip and ground up construction projects. There are discounts out there that those discounts can easily overtake the rising costs of tariffs.
Yeah, that's great advice from someone that's done a few thousand flips. Yeah. So, no, I mean, more than you can count on one hand, right? Which is what most people would say. James, as in your role as director of sales for HouseMax and the deal desk, you, again, I mentioned before, you are the first set of eyes on every deal that comes through our company. As somebody doing the initial underwrite, from our perspective, are you looking at deals differently, or is there an added level of scrutiny when you're looking at a budget or at a scope of work, given the volatility of the market and the potential cost in building materials?
Yeah, I think it's really important. One thing I key in on is do they have a contingency in their budget? Are they ready for the unforeseen gremlins behind the wall, for lack of a better term? Also want to make sure that they address, especially if we can see something on Zillow or MLS, or we have some initial photos, even an appraisal, have they addressed every issue on their budget that could be an issue on the appraisal? I.e., is there popcorn ceiling? Are they handling that? Does the deck need work? So on and so forth. So yes, I do look at that quite a bit, and then I marry that up with that borrower's experience and what they've done in that market and see if it does play.
Jeff, we were talking earlier, and you said something that really resonated with me, and that was if you were still flipping 100 homes a month or 100 homes a year like you were 7-8 years ago, that you would essentially do 2 underwrites on every deal you looked at. Maybe talk a little bit more about that.
Yeah, I think in today's market, there's a lot of uncertainty, right? Because we're going to buy the house today, and then we're going to renovate for 120 days, and then we're going to try and sell another 120 days. So we've seen over the last 30 days the market shift dramatically, and there's a lot of unknowns where we're going to be 240 days from now. And so when I'm looking at the potential purchases today, I'm expecting to underwrite both exits. One if I'm going to sell it, and one if I have to keep it. And so I want to be conservative on what we think that rent's going to be and what my LTVs are going to have to be for me to go get a DSCR loan. And then I'm even adding a little bit to the current rates on the DSCR, thinking that we could possibly see some rate creep, and we'd have to qualify at a higher rate. So really looking at the asset and saying, okay, if I had to sell it, where do I think I'm going to be? And if I have to refinance it and hold it, where do I think I'm going to be? And if you're going to buy an asset today, I feel like you have to be comfortable with both exits.
Aubrey, as somebody that works with hundreds of borrowers a year, some of which are enterprise level investors and borrowers, are you seeing them approach their initial underwrite on projects? Are they looking at the viability and the profitability of a project different today than they were 3, 4, 5 months ago?
Yeah, I think you have to be conservative in your underwrite. And if you think of your project as a glass half full of water that you're trying to walk to the end line where you're minimizing the amount of water lost, you have to make sure that you buy at the right price, that your scope is comprehensive but not overdone, and that you're working to save money in every facet, whether it's picking a superior provider like us and holding costs are as minimal as you can get them, or you're, negotiating in the bid room with price, or you're working and almost negotiating with contractors and staff that are going to be doing your work for you. I feel like new people are not doing enough due diligence up front with who's going to be doing the rehab, and really kind of getting multiple bids from contractors to get competing prices. And they might be overpaying for some of that work. So if there's room to add a contingency, I think that's great if the deal warrants that. I don't think people are using that line item enough. And with the economy, I think that's an underutilized line item, to be sure. And then if you're new, the promise of repeat business and like continued work, what could a contractor save you if you're promising you're going to be bringing 3, 5, 10 projects a month and keeping them busy?
So Jeff, obviously running a national hard money lender, you're not out flipping 100 homes like you were back in the day, but I know you're still out there buying assets. It's your side hustle. You love doing it. What advice do you have that jumps out that's really going to resonate with novice flippers and enterprise level flippers as well?
This is an easy one, Sean. The best advice I have for fix and flippers and ground up construction folks in this market is to buy it right. And the only way to buy it right is to make sure you get that price good on the way in. And really that means that sometimes you're going to have to retrade or renegotiate with that seller. If I was buying a house today and I was in a contract for the house today and I'm trying to close 5 days from now, I would 100% of the time go back to the seller and ask for a price reduction. We're not sure what the labor is going to cost. We're not sure what the materials are going to cost. And I can tell you for sure, we're not sure what the exit's going to be. And so I would be talking to that seller and saying, seller, I'm going to need it at a bigger discount because of all of these things. The seller has a TV. They know what's going on. I would be leveraging that. And there is a direct correlation. For every dollar I get off on that price is $1 more in profit. And so I'm going to go out and reach out to those sellers and talk to them. Another thing that potential fix and flippers should be doing in today's market is really project managing their projects. And today, more than ever, it is more important to have a clean project that turns right the first time. Let me give you an example. If I show up to the job every 5 days, I'm not going to be able to really watch this stuff go in wrong. If I show up and the tile's crooked and they're already grouting it, now I'm making this decision. Am I going to rip it out? There's a whole cost, there's time, and there's money that's going to do that. But if I'm on site and I'm watching them put it in, they can fix it right then. I save interest expense, and now my tile goes in right, and we can end up with a faster trade. So really managing our project has never been more important than today. So I urge all of our fix and flip borrowers and potential folks out there, be on site every day and hold your contractors accountable to the level of work we would expect in the houses that we live in.
Jeff, you've got a great story of when you were flipping back in the day, when you were surprised when you showed up on a project 5 or 6 days into it and the crew was actually working on the neighbor's house. So share that story with us, because I think that's one that everybody needs to hear.
I appreciate you bringing that up. Yeah, so this is it goes directly to how well you project manage, right? So we're in Austin, big flood comes in, and there was flooded this whole neighborhood. And so we were in talks to buy half of the street to renovate. Well, we bought, some of the homes, not others. I show up 5 days later and I'm looking at looking at the home, and I'm walking it, and I'm seeing new drywall go in, and we're starting to tape it. And then I walk back outside, and I realize that I'm putting drywall in the neighbor's house, and I actually own the one next door. And that was not a great moment. The guy that owned the house next door was watching me put drywall in. And I said, "Why didn't you stop me?" He said, "You're doing a great job. Keep it up."
That's great. And you probably still get a Christmas card from that guy every year, don't you?
You know, it's been a while.
Right, James, one of the things that's unique about HouseMax is the way that we approach relationships with our borrowers. And we underwrite more to the investor than we do to the deal. We call it KYB, know your borrower. And part of that is really getting in deep, getting to know the borrower, but also being a partner in the project, in how we choose assets, how we underwrite assets. And a lot of that is tied to comps when we're talking about initial underwrite. You've got a really great way of framing how we look at comps, a really unique way. Maybe share a little bit about that.
Yeah, traditionally, when someone says, "What are your comps?" you're going to look around in your area and see exactly what's sold for X and the same bed and bath count, right? But we're really looking at comps as competition. Like, who are you up against? Like, what does the next street over look like? What are the other folks doing? What are the finish outs that are selling quick on the market? And how well are you going to do to compete with that? And will your $30,000, $40,000, or $50,000 go as far as the next neighbor who has a finished product that sold recently? That's kind of how we look at it right now.
Aubrey, one of the reasons that you've been so successful at HouseMax and makes you so unique as a loan originator is that you actually approach your relationships as a true partnership. You're not looking at each deal, you're looking at the investor and how can you add value, or as Jeff says, how can you be as important to their business as they are to ours? And a lot of that is tied to helping underwrite deals. And you've got a really unique way that you look at comps that's a little bit outside the box. So maybe talk a little bit about what comps mean to you in terms of an underwrite.
Yeah, for sure. I think the one maybe misstep that I see in even new investors to seasoned folks alike is they see a comp and they pin the entire project on one comp and one comp only. To Jeff's earlier point, like the market is ever shifting. So I think you're doing yourself a disservice if you're saying like, oh, my home is exactly like X that sold 3 months ago, when realistically you're not going to be done with that project for another few months and then to list another few months from there. So I think you really got to look at comps as your competition. And then be mindful of the market, and like what can be easily absorbed in the market is really important. So what I mean by that is like a price point of like a $300,000 ARV, you might be able to offload that a lot easier than you could north of, $1 million, $500,000 or $1 million home. And doing a lot of deals in Austin where I'm feeling like there's some room for opportunity or maybe advisement, or just like taking a look at a deal again with my investors is like, what's kind of the it factor? You're selling to like the end buyer. It's not your home. It's like what will sell. And I think having that kind of like really unique feature that sets it apart from the competition, that makes your home move first, is really important. Like, are there vaulted ceilings? Is there a really dramatic backsplash, or something that is easily sold? Some lipstick on a pig type cosmetic stuff will not cut it in certain markets. So I think that's something to be mindful of when you're looking at comps.
That's great. That's great. So Jeff, when you made me buy you lunch earlier today, I thought you read a really cool take on how you look at comps that might be a little bit different than a lot of people in the industry. Maybe talk a little bit about that.
Yep. So historically, people talk about comps, and they, what are comps? And everybody raises their hand and they say, they're comparable sales. What has this similar property sold for? That is the wrong way to look at comps today. Comps today is competition. When I take my asset to the market, who am I competing with, and am I going to win? There's really 3 ways we can win: price, condition, or location. And I'm going to look at my asset and figure out which one of these 3 I have, right? If I'm next to a really cool park and I've got a great quiet street, that could be why I'm going to beat the competition. If I don't have the best condition, then really I can't move next to a park. I have to beat with price, right? So one of those 3 things. And so when you're looking at your asset, figure out which one of the 3. Are you going to compete on price? Are you going to compete on condition or location? And that's how you look at comps. It's really competition. And which one would you buy first? I always think to myself, if I'm driving with my wife and we're going to buy a house, which one would she buy first? And if you think about it like that, it gets super easy to understand what you're doing.
All right, so as we wrap up, I feel like we have to get one shameless plug-in for the company. So let's do this. Let's start with Aubrey, and then we'll go to James and Jeff. And just share with us, from each of your perspective, what is HouseMax's superpower, and why should investors at any level want to work with us?
Yeah, I mean, you can go anywhere, and I feel like the differences in rate, leverage, fee are going to be super marginal. But I think what makes the difference here is we are still very much a grassroots company, and we are so invested in our clients' success that I've had Jeff on numerous calls with investors, and James has taken calls with investors with me, and we've really gotten to know what people's needs are. So that's one element. And then I think we are very much in a solutions-oriented mindset. So if you're looking to scale, no one's done it better than Jeff. And I think that's how we're setting up our product. And it's how can we be as important to you as you are to us? So that's why HouseMax.
Well said. James? HouseMax's superpower, and why do so many investors want to work with us?
You know, I think HouseMax's superpower is definitely our ability to be in touch with the customer and understand that there's a sheet that most lenders like to lend upon, but there's also a deal here, and there's another person on the other side of the phone that's trying to make some money and set up their retirement and maybe put their kids through college. And so we have the know-how sitting behind us, sitting next to us in the office that we can go bring a sheet to and say, hey, what do you guys think of this budget? What do you think of this deal? Can you look at this with me? And we can give that advice to that borrower besides saying, hey, do you check this box or not? So that personal touch by HouseMax and always the ability to have a warm body on the other side of the phone is what separates HouseMax from our competition.
All right, Jeff, same question to you. So let's wrap up HouseMax's superpower. I mean, from the guy that built the company. HouseMax superpower, and in your eyes, why have we seen this hockey stick trajectory of growth over the past couple of years in terms of the number of borrowers that want to work with us?
Yeah, I think it's the success of our borrowers. We look at every deal as if we were going to flip that deal ourselves or build out the deal ourselves. And so we're not looking to see if it fits some box. We're looking to say, would I do that deal? And if I wouldn't do that deal, we're going to counsel you as to what sort of things you can change in that deal to make it profitable to you. So looking at that and having a really good experience underwrite and help you making that decision, and really access. You know, a lot of times I'm on calls with borrowers, certainly daily. We're talking to borrowers about projects that maybe didn't go right, and they've got access to me and some of the other folks that have been with me for thousands of flips. That type of information and access is how you get out of bad deals. And so access to us is really a big piece.
So I'll tell you from my perspective what I think HouseMax superpower is, and it's our people. And it starts with the three people that I'm sitting here with that are great leaders, great stewards of the brand, to the other 87 employees at HouseMax that are here in Austin and spread out in other markets around the country. And that really is the difference, that we sincerely care. We treat every loan like it's our only loan. And I think that's served. There was a time when every loan was our only loan, right? But I think that served us well, that we haven't lost that mentality. We haven't lost that service first approach to growing the business and to helping our borrowers scale. So thanks for being here today, guys. This was super fun. I'm excited to do it again. Aubrey, I think it's so cool that you matched the chair today.
I didn't know what the chair was going to look like.
It's a green screen.
All right, well, listen, thank you, guys. Thank you so much for taking the time to be here today. I know nobody wants to leave the office in the middle of the day to come sit and do a cool podcast. So much fun.